This is Craig Haugard with your Financial Issues Ag Update. Well, corn was on the defensive yesterday as it was pressured by the forecast of beneficial weather for the next couple of weeks. The energy market is seen as supporting the current rate of ethanol production, but not bringing much more idle capacity back online, and that created some price pressure as well. Weekly export inspections were pretty solid at 44.4 million bushels. After the close, the crop progress report showed that 93% of the corn crop has been planted, just 4% ahead of the 5-year average pace. 78% of the crop has emerged, and the crop is rated as 74% good to excellent. In the overnight trade, we have spot corn futures trading unchanged. The soybean market rode an emotional roller coaster as Chinese rumors swirled throughout the marketplace. At one point, the rumor was that the Chinese government had instructed private firms in that nation to cancel pork and soybean purchases and to halt further purchases of U.S. commodities. After those rumors hit the market, we then learned that China was tendering for soybeans, and in fact, it was rumored they had bought 5 cargoes of beans from U.S. traders. Here in the U.S., 75% of the bean crop is now planted, with 52% emerged as we continue to run well ahead of the average pace for this point in the year. In the overnight trades, spot soybean futures are trading 4 cents higher as I record this. Wheat closed lower as it seems to face some real headwinds. The weekly export inspections came in at 18.3 million bushels. That placed total annual export inspections as of May 28th at 914,800,000 bushels. The new marketing year started on June 1st, so it is almost certain that we fell short of the 970 million bushels of exports that the USDA had projected. Moving forward, we're going to continue to struggle in the export market with U.S. hard red winter wheat FOB values currently at a $21 per metric ton premium to Russian wheat for the July slot. The weekly crop conditions for winter wheat are 51% good to excellent. 77% of that crop is headed out, with 3% of winter wheat having been harvested. Spring wheat now stands at 91% planted, with 67% of that crop emerged. The crop looks good. The spring wheat crop, in fact, is rated as 80% good to excellent. In the overnight trade, Chicago and Minneapolis are each 2 cents lower, while Kansas City is down 7. Cotton futures had their highest close since mid-March, with the July futures closing $2.47 better as they settle at $60.06. Crop progress report showed 66% of the crop planted, with 8% squaring, and both those numbers are in line with the 5-year average. In the overnight trade, spot futures are continuing yesterday's run higher, trading 61 points better as I record this. Livestock futures were mixed. We had the August live cattle futures finishing the day 62.5 cents lower, while August feeder cattle finished the session 77.5 cents higher. Lean hog futures were weaker, with July futures $1.87.5 lower at the close. Class 3 milk futures turned in another strong performance. We had June futures up 47 points as they settled at $18.97 and were trading unchanged in the overnight trade. And meat cutout values took a beating on Monday. Choice box beef was $22.19 lower as they closed at $341.15. Select boxes were $23.24 lower, settling at $316.83. Pork carcass cutout values hit the skids as well, finishing $7.16 lower as they ended the session at $81.04 per hundredweight. This has been Craig Haugard with your Financial Issues Ag Update. We'll be right back with more financial issues after this.